Hey, it is Steve from the Stock Index Trading Room. Let me get my screen up. We're ready to go. I hope this finds you well. In this presentation, I'm going to do a detailed expansion of what we talked about last week, finding protected market entries that position ourselves in front of price breakout. Let me do this. All of this comes from our discussion of the science behind market expansion. If you've not looked at this and you're interested in why markets move in the direction they move and the magnitude they move and things like that, maybe this weekend, this is Friday the 27th, so this chart is the 26th. That's just our policy. This was not a vibrant day by any stretch of the imagination in the market, but that's what we do. I don't go back and look 3 or 4 months in arrears and find a great day. This was yesterday, and this is what we do. But go look at science behind market expansion this weekend. If you're in the U.S., 4th of July. If you're not, markets are short trading days. You'll have some time and you'll get sort of a feeling for, okay, markets move away from support and resistance. And there are reasons, and I'm not going to talk about that now, but this goes through that. This would be protected entries 3A, trading protected entries. And this is a visual lesson in order flow breakout. Need more information? Here it is. The most common pattern in all of markets is a 1, 2, 3 or an ABCD pattern. ABCD, ABCD. And of course, the point that everybody's interested in is a point of no return. Now, as nice as that sounds, if you're in a statistical probability business, you're a very successful trader. If you are in, I'm going to guess where every one of these bars are going to print business. It's going to be hard, and I'm going to show a little bit why before we get started. This is the whole key to what we do in the stock index trading room. Price follows order flow. Period. There, may be a rare occasion that you could look, a number comes out or some goofy something's going on, but for the reliable part of our trading, price is going to follow order flow. Okay. We're going to position ourselves in front of future price movement. Trap Trader Oscillator is a fourth generation, meaning Rob has refined and developed and tested and traded and whatever for 3 decades, Trap Trader Oscillator. And we're going to show you how it reads order flow, advanced order flow patterns that help our members get in front of future price movement. But here's the whole key. Couple of things. One, this pattern that we're going to show you is usually found in engaged markets. That means that there are enough people that know what they're doing to expect continuation. Okay. This pattern that we're going to tell you is put in by large smart money accounts, and I'm going to explain why. If we're getting order flow breakout, it means we're getting a concentrated number of accounts in a single direction. Okay. Small account amateur retail traders are notoriously inconsistent. They are not consistent enough to put these patterns in. All they do is just put noise in and make it confusing for people that don't know what's going on. But when we get an order flow breakout pattern that's hidden in price, it's not by the small accounts, y'all. Okay? It's by the large smart money accounts. When we're not getting these, what does it mean? They're not trading. Why? Because there's no advantage. They don't need to practice. Okay. So what we're going to show you today is a pattern and a concept that tells us, is this small, insignificant, top traders, or is this put in by people that, one, know what they're doing, and two, are going to defend their positions. And that's the only time the stock index trading room wants to trade, is when we have evidence that the large accounts are doing something. And here's the only secret you need to know as far as trading. Okay. Price follows order flow. Price is a historic representation of what has happened. It's the past. People that are trading price bars are trading the past. That's why they struggle. Order flow causes price to move. People that trade order flow are trading in the future. Big advantage. In a world that's ruled by cause and effect, please understand this. The effect of excessive order flow is a price bar. Price bars only do what they do because of order flow. The cause of everything you want to do in trading is caused by order flow, not by price bars. So let's focus on order flow. Okay. So what we're going to do is we're going to show you a real simple ABCD pattern, but we're not going to use price bars because it can get real choppy. Okay. We're going to use an order flow reader that gives us an advanced read that price is going to go in a certain direction. And that's it, right? We do it every day in the room. I teach this. There are other things, but I teach this every day in the room. Okay. So this is this is called a Santa Claus. If it's on a frozen or a sideways price action price bars, it's an amazing, we call it a reverse Batman, and it's an amazing signal. But all we're going to do for this presentation is we're going to go ABCD on color with what we call price point, smart price point breakouts. ABCD, right there. We're going to put one there. ABCD up. We're going to put one there. ABCD up. Okay, we're going to put one there. ABCD up. We're going to put one there. I think we're out of time. That's it. Now, if you come to the room, it'll take a day if you focus on that to learn what that looks like and how to do that. And so now, see, flowers are red, green leaves are green. So let's move our arrows. That's not the first one. Here's the first one right there. Okay. We have one there and we have that one that didn't work, and that happens. We have that bar. We have that bar. We have, whoop, there we go. That bar. And that's it. That's it. So real quickly, we'll bring in smart trade markers, and we're gonna look and see how this did. Now again, this was Thursday. We're just gonna put, oh, don't do that to me. Let me see if we could. Yep. Okay, it was too far away. So we're just, this is, this just will give us a workable recap for this. We'll make sure we got them all. We're out of time. We did. So we bring this in and you can see we have nothing in it, which is the way we want to start. We're going to represent one trade for 2 points, one trade for 3 points, one trade for 5 points. We're not saying you should do this. Some people like to super scalp. Other people like to, get more than a bit of reward for their effort. But regardless of what you want to do, not a very good day again. Not a great day. Total profit was 934. Each trade returned, win, lose, or draw, returned $200 trading this way, right? Trading this way. So again, I didn't go, we had days early in the week that this number had a comma and a crooked number in front of it for one day. Today's not that day. And again, and I don't go get, oh, let me show you this day because it was great. We're traders, and it's important to know that not every day is going to be a monster day, right? Not every day is going to be a monster day. Better than most people did, probably, but it is what it is. So a visual representation of using order flow, because order flow forecasts the future. Order flow forecasts the future. All the time? Nope. Enough of the time to be successful? Yep. Even on a bad day, even on a hard to trade day like Thursday, order flow is going to forecast the future. What is the future? The future is the price bar. So we're going to get in front of the price bars, and we're going to show you how to do it if you want to come to the room and learn. So that's it. On behalf of World Cup trading champion Rob Mitchell and all the successful world-class members in the Stock Index trading room, I'm Steve, wishing you happy trading.